Okay, hello everybody, and welcome to this week's edition of Selfwealth Live, the technical analysis edition. Jace, how are you today?
Hey, Rog, I'm good. Looking forward to another show. Lots of markets, lots of stocks. Yeah, should be an interesting hour or so.
Fantastic. Welcome to everyone on the other side of the screens as well. We always love you coming. It's a good day. It's a big day for us today because it is our 2-year anniversary show today. So I'm just going to pop a virtual party popper here, and congratulations to us for getting through 2 years of this show. And it's just been a fantastic journey, Jace, along with my portfolio, because I actually started a portfolio around a little bit before we started this show, right? Based on your strategies and things like that. And I share my results on LinkedIn. So if you wanted to have a look, you can certainly go over my LinkedIn. It's on the YouTube description here. And I don't think that I feel like my portfolios, I finally got the confidence to invest in the share market and having a proper system due to what we teach here and what you've taught over these years, Jason. And I think a lot of people on the other side can be a testament to that as well. And as a matter of fact, that I've got that much confidence now. And not to say that obviously confidence can also be a killer if you have too much confidence, right? But I've now also got the confidence enough that I've started a US portfolio for the first time in my life, based on some of these same principles and what we teach, right? So I've got my first 3 stocks up there now, and they're doing. Two are doing well. The one is slightly pulling back, but that's fine. It's all part of the system, right? But it's been a great journey, and it's been, yeah. I thank you, Jace, once again.
Yeah, 2 years. I didn't realize that. It sneaks up on you. It's that's amazing in itself, and it's so good that you're being able to really systemize what you're doing and make it process orientated. And it's not like market's been up in a straight line over the last 2 years either. You got the tail end of that bearish phase through 2022, 2023. Markets bottomed around October 2023, it would have been. Then we had a pretty good last year, 24, but then this year's been look at it now, it's like everything's great, but in April there was a large pullback, a correction. So it's to be able to navigate through different phases of the market and come through that with confidence and a positive portfolio. I think it says a lot for being system focused, because a lot of people will get a rocky period and they go, oh, what I'm doing doesn't work, I'll go and do something else, and then nothing ends up working because they're always stopping doing what they're doing when they go through the tough times. But you've come through difficult periods and you keep going, and yeah, terrific, Rog. Well done.
Yeah, thanks for that. As you say, it's one of those things that before I found someone that I could relate to, such as yourself, and a system that I thought would be fit into my time schedule, because it's such an important question. Is when you have a system, you need to be able to fit it into your schedule, right? And not make it your full time, because it's not my full time thing, right? But before that, I was one of those stock pickers that would go off something, news or some sentiment, or so I've heard this stock's a good one. I never had a system to get in or get out. And so many people I speak to, whether it be at work or whether it be around, it's the same thing generally. I think the 1% of people who use systems, right? Like in any business, I think I treat this like a business. And if I'm not sticking to my rules, it'd be like, if you had an employee that wasn't sticking to the job almost, or the rules, how good an employee would they be, right? So I do treat this as a business once again, and it's one of those things that before I found a system like this, I never had that business, right? It was more just it was my hit and hope strategy, which I've mentioned in the past as well. And now I'm trying to turn that around with motion trader style strategies, right? So it's a great journey anyway, Jace. So
look, I do think you do need to have that business focus with individual stocks. If you just want to invest, go buy an ETF. That's fine. It's a great way for probably most people. But I think if you want to do individual stocks, then you've got to be process orientated. You've got to treat it like a business. You've got to put in a bit of time. Now, it doesn't need to be a full-time job. That can be just allocating might be half an hour a week, an hour a week, whatever it may be. But you've got to allocate some time to focus on what is your process and thinking about it. And like I hear from a lot of people who say, "Oh, I'm just too busy. I got no time. I don't want to. Just tell me what to do." And it's like, well, that doesn't work. It's all well and good for someone to tell you what to do when the market's going up and you're making money, but as soon as you start losing money over maybe a 6-month period during a bearish phase, you'll tell that person, "Oh, you don't know what you're talking about," and you stop listening to them. If you don't take the time to understand the process and understand that losses and bearish phases are all part of the cycle that we've got to navigate, you should be an ETF person. Individual stocks are for business-focused, process-driven people who want to understand and want to give things the time that things require to do well at.
Yeah, fantastic. Exactly. All right. Having said all that, it's one thing that we discuss all the time is having the patience, having the process, having the plan. Everything we do talk about on this show is general in nature. So let's go and chat about, even though I talk about some great results, obviously the past doesn't equal the future. So let's get onto that disclaimer, Jace, if that's okay. And let's have a look at that.
Yes, so of course, everything we do today, general commentary only, no personal advice. And I'll put on our disclaimer. That just goes through all that. I'm not part of Selfwealth Safe. I'm Motion Trader. My details and licensing, everything is in the top portion. Beneath there, you'll see all the Selfwealth information. All general commentary only.
All right, fantastic. Now, the beauty of this 2-year anniversary show is that I wanted to do something special for our viewers as well. So that's coming up. So if you feel like you've got some value from this show, we love seeing the comments on the video. But the next thing you can do is if you've got people in your network, then share the video, share the love, so to speak, right? Because we want to be able to reach more people and to be able to teach them if they want that business in choosing individual stocks, right? Then this could be something that might help them, right? So feel free to share. And I'm working together with our team to have a special offer for our viewers coming up in the coming weeks, all right? So stay tuned for that. Other than that, Jace, let's get onto that Aussie market. What's happening?
Okay, so we'll get to our charts. And first up is going to be the ASX 200. And so the index has had its biggest pullback in 5 months. So from an all-time high about 2 weeks ago, the ASX 200's quickly pulled back by about 3.9%. And most of that was last Tuesday and Wednesday. The last time we saw a pullback of this size, it was back in the early stages of the recovery, just after the April low, had a big initial rally and then a short, sharp pullback. So that's the last one of this magnitude, or if even a little bit larger. Last time we spoke, last week we spoke about being mentally prepared for a pullback. Prices had been historically elevated above the 50-day moving average, and when that happens, the odds of pullbacks increase. I think by being mentally prepared for a pullback, hopefully it helps avoid the fear and the panic that grips many people when they see the market or they see the headlines about quick declines. So far, it's simply been a pullback to the 50-day moving average. So you've got the 50 and the 100-day moving averages. And this often happens in a rising trend. Like, just look at the previous big trend. You can see all these pullbacks to the moving averages. It's all part of a rising market. We get these pullbacks to the averages. Prices, and that's how it worked. Prices, they rally, they pull back and consolidate, and then often they resume their upward trend. What's been impressive about the rally off the April low is the length of time the ASX 200 has been above its 50-day moving average. So it first got above the 50-day moving average in late April, and then it's had this lengthy run above the 50-day average without a retest until just recently. And so that period from when it crossed in late April to where it just retested recently, that was 94 days, a 94-day streak above the 50-day average. It's interesting, Rog, that's the longest streak since back in 2004, 2005. So that's nearly, well, that's about 20 years. So really, a pullback shouldn't be surprising when you have these big runs without really much of a retracement. And remember, consolidations they're generally positive as they help make uptrends sustainable. It's when prices accelerate higher without pullbacks that I think the risk can really start to get elevated. I don't think we have those conditions here. This hasn't been like a hyper rally, which just like lifts straight off with a whole lot of excitement. It's there's been nervousness all the way up. That's the wall of worry. That's your classic bullish phase. I think another factor supporting the overall market is what's happening in the equal weight. Just have a quick look at the ASX 200 equal weight. And when we look at this, and it's not quite coming up for us at the moment. We'll see if it comes up in a sec. But the interesting thing with the equal weight is that it hasn't pulled back by as much as the ASX 200. It's held up quite well, and I think that's a sign that the broader market is actually doing doing quite well. And much of the weakness has been this has been a pullback in the larger stocks. So I think that's a positive for the market overall. We'll just come back to the ASX 200. Oh, that's not really working. Are you actually there, Rog?
Yep.
Yeah, just checking my internet's working because my charts aren't. Maybe I can just see if I can do a refresh, do a reload, and get this going again. That's encouraging. We've got something back. There we go. Yeah, this is what I was talking about with the equal weight. It's just been a modest pullback. Hasn't come back to the 50-day yet. So that's a sign that the rank and file is doing quite well. And this pullback we're getting, it's largely in those big cap stocks. I think maybe several weeks of consolidation is a fair possibility here. The latest pullback didn't attract the sort of buying interest we've seen in the past, where prices have come back, shallow pullbacks, and quickly snapped back. It's been well, as we say, the largest pullback in about 5 months. So without that eagerness to buy, I think it could be a bit of a base building process, perhaps over the next few weeks, and then that might be what we need to see higher levels later in the year. But the underlying structure here remains positive. Rising moving averages, price above the moving averages, a series of rising lows. I think the odds favour this is a pause in the trend, not a change of the trend.
Okay, fantastic. Let's have a look at the US markets.
So over to the S&P 500, and a positive week for US stocks. Prices started last week with a move lower. You can see prices hit an all-time high, and then last Tuesday they came back. And but that dip was quickly bought, and the S&P 500 hit its 21st all-time high for the year on Friday. Last week I spoke about keeping an eye on a potential bearish wedge. Let me just quickly sketch that in. If the marker will work. Having issues with TradingView today. So yeah, there's potential bearish wedge. Just got to imagine it in there. And so I was saying, keep an eye on that, and also keep an eye on the low from the 20th of August. I thought if the 20th of August low broke, that could then potentially be the trigger point for a multi-week consolidation, maybe a retest of the 50-day moving average or even the 100-day moving average. But when tested last Tuesday, it held and prices have rallied. So that just tells us the momentum remains to the upside. It's interesting to see similar price action playing out in the Dow, just coming over to the Dow Jones. The latest price action here, it looks like a zigzag decline. You can see the previous high, then down and up and down. That's your classic zigzag structure, and it's pulled back to support. It comes in around 45,000. You can see the blue horizontal there just picks up some previous highs and the recent low. And the Dow's been trending high, had this nicely upward trending structure for several months now. It's been a case of where we get strong rallies, and those strong rallies have been followed by neat consolidation, and another strong rally, and neat consolidation, a strong rally, and now consolidation. And you can see prices are stepping higher with the moving averages acting as, like you could say, like the landings. So there's our up step, and then it's the consolidation into the moving average, the landing, an up step, consolidation, and so on. It looks to me that this is a market that where higher levels are higher levels in the making. The Nasdaq is also looking constructive. Quick look at the Nasdaq. It made an all-time high in mid-August, followed by this corrective-looking consolidation back to the 50-day moving average. And now we've got another rally off the 50-day moving average. So all up, bearish price action across the board. Just back to the S&P 500. I've been saying that the potential for a multi-week consolidation exists over the last few weeks, but until the price action gives a clear sign that's underway, I think the path of least resistance remains up. I think that's the way we approach it. And when the trend is up, I don't want to second guess it by standing in its way. I think a really good example to reflect on, Rog, is what's happened over June, July, and August. So June, July, and August, they're seasonally the part of the weakest part of the year. Yet all three of those months have been up. And that's not something we usually see. So if you listen to the old saying, sell in May and go away, you would have stayed out. Like, where's May? Here's the end of May. If you've sold in May and gone away, you're coming back now to an unpleasant surprise as the market's done a lot of work without you. Mm-hmm. So I think above all else, I want to follow the price action, not sayings, not seasonality. They're things to be aware of, but the price action is the big thing for me. No one knows what's going to happen next, so I think the best play is to give an uptrend every chance to surprise you on the upside. And I think this one surprised a whole lot of people. So yes, always be aware of risk, manage it with trailing stops, but I think we want to be optimistic that a trend can go further, not fearful that it's about to end.
Yeah, I think that's a good way to look at it for sure. And how's the Asian markets looking?
Over to the Hang Seng. Again, bullish price action. Another rally off the 50-day moving average, and you can see prices are really moving in on a new recovery high. Not an all-time high, but it'll be the highest level in several years. Should it go a touch further? All the markers here, I think, are bullish. We've got the rising moving averages. We've got the price being above the moving averages, and then of course we've got the series of rising lows, rising highs. I think it's a case of being positioned for more upside, and the same goes when we look at the Chinese market. It's been a week of consolidation. There was a pullback mid last week, and then we've had a rally since then. So this is a natural place for a consolidation to develop, and that's because, well, firstly, there's a big overhead, or there's a big resistance region overhead. You can see we've looked at this before. Goes back to 2015, so 10 years. 10 years, this has been a support resistance area. So we're nudging into that now. And also it's been a strong rally off the 50-day moving average. So two reasons why it would be normal to expect a pause in the trend. So I think very normal to get that pause here. I think last week's low is a key near-term level. I'd really like to see that hold to keep the structure looking strong. If prices can hold above there, and maybe there's some more sideways price action, but I think that can then set the platform for higher levels. Overall, I think this is a market with more upside potential. Let's see whether this series of rising lows can continue to extend. But of course, give markets time to pause, give them time to consolidate. It's not like it happens on a day-to-day basis that prices keep rising. You've got to, they're going to be multi-week, they're going to be multi-month consolidations within an uptrend. You've got to give them time, but that overall structure at this point, it is bullish.
Fair enough. Fantastic. All right. So let's get on to everyone's tickers now. We'll try and do our best to get onto 2 for the show each. And obviously, if you've got any general questions, you can certainly shoot them through. G'day, Hassan. Let's start off with Live 360, please.
Okay, so this is a strong upward trend. Trend remains in place. It is stretched above those moving averages. Don't be surprised if there's some consolidation, but I'm happy to stay on an upward trend. I don't want to try and get too clever and say, look, it's got to pull back to the moving averages, so I'll take profit and I'll buy back in. I think that's a hard way to play things. I make my money by staying with big trends. So if I was on this one, I'd be letting it run. Rising moving averages, rising lows, rising highs, price above the moving averages. It's for me, this would be a portfolio hold.
Okay, fantastic. LDX.
Sorry, what was that, Rog?
LDX.
Again, an uptrend. It's not as long lasting as the Life 360 one. This is more of an emerging trend. But we've got it's a low price stock as well. So we've got the rising moving averages, prices nicely above the averages. If I'd bought some of this early on, I'd be letting it run. I'm probably not enthusiastic about buying at current levels because it is elevated above the moving averages. And it's also come from like being 2.7 cent stock to a 14 cent stock. So I'd be careful with trying to buy a position now. But if I had some, I'd be certainly happy to hang on to it. If I happen to have had bought some back at 2.7 cents, I'd probably even think of like maybe even taking a little bit of profit. Could be a fifth, a third, a quarter, whatever it may be. I know some of these low price stocks, they can get very excitable and then they can quickly come back to earth and then go into lengthy corrections, or we wouldn't even call that a correction. That's just like a bearish phase. So nothing wrong with taking something off the table, but I'd definitely be letting my the bulk of my position run if I was on board.
Okay, good ones there, Hassan. Let's have a look at Bob's BKY, please.
I've got the wrong market for that. It's it trades on a few different exchanges, but we'll look at the ASX one. It's nice move higher earlier in the year, and then it's just been in this big multi-month consolidation since then. I've got some of this myself. I'm happy to keep holding it while this consolidation plays out. Like, which way will it break? Will it break to the downside or the upside? My bias would be to the upside because this is often what we call a continuation pattern. So you get a rally, you get a pause, and then you get another rally. That's why it continues. It continues at the previous rally, but it doesn't have to work like that. It can also break down. So that's why we always use a stop loss or a trailing stop. I'd be happy holding this at the moment. I am happy holding it. Let's just go to this the one on the BME, which is the Spanish exchange, because I think that might be the home exchange for this stock. Just get a little bit more depth to the data, and it looks like it's also like, and there's there's a bigger consolidation in play, a multi-year consolidation, and we've got this multi-month consolidation. So it's a consolidation within a consolidation. I think this is a bit important. What happens here? I want this series of like rising lows to remain in place. If prices were to break below the August low, it does start to then develop more of a vulnerable structure because then we're below moving averages. The moving averages are starting to roll over, so wouldn't want to see it come down and spend too much time below the averages. That sets up vulnerability, which can then resolve to the downside. But at this point, I'd be wanting to stay in there. I'm probably not a buyer at this point. If it were, say, it were to break above the high from August, just to like get this series of rising lows, rising highs, give it a bit more confirmation, that could be a buying point if it were to break above this high from August. But where is it at the moment? I'll be happy to watch it. Below the August low, I'm getting concerned. Above the August high, maybe we're getting ready for a move up towards the top of the range and potentially beyond.
Okay, fantastic. Jennifer, thank you as always for letting us know it's the greatest show around. MAU, please. MAU for Jen.
Yeah, well, this has been struggling a bit. It's consolidating below the declining moving averages. So it's that's not the sort of price structure that I want to see. But then again, like, look, stocks do spend some time below the moving averages and consolidate below. So that's not a game breaker by any stretch. But we don't want to see these recent lows start to break and for new lower lows to be put in. Then it really does start to considerably weaken the structure. I think the key now, we want to see this get back above the moving averages. I'd be it's not a stock I'd be holding at the moment. I'm also aware that it's a gold stock. We're in a bullish gold environment and it's struggling. So that's not ideal. So I'd be inclined to not have this in my portfolio. If I were interested in it, I'd want to see it flip back on the good side of the moving averages, and then I could look at it from a more positive perspective. But at the moment, I'd just be careful. I'd be thinking, like, if I'm holding it, what do I do if it breaks to a new low? Where do I manage my risk on this one? Where do I start to protect capital? Below declining moving averages isn't the ideal structure.
Okay, fantastic. Now, the comment here, there next door to Genesis. I'm not sure if you're wanting us to look at GMD as well, but is there a ticker GMD?
Yep, there is.
Let's have a quick look.
Uptrend, nice uptrend. I think it's gold indicated. It's hitting new highs, rising moving averages. It's if I had this, I'd be staying on board. It's also a motion. I'm pretty sure it's a motion trader stock as well. Had that large corrective phase. That would have been a close call for a wide ATR stop. Whether that was able to see that correction off. But look, if I had this one, I'd be staying on board. Probably a little bit more difficult to buy it at current level because it has already now had that run off the moving averages. I talk about gold stocks in my weekly Friday strategy session. I spoke about some entry strategies a couple of weeks ago. But yeah, now with gold having run, it's probably it's more a case of holding positions rather than chasing them.
Okay. All right. Thank you. Sanjesh, can we have a look at Qantas, please?
Rising trend, rising moving averages. Yeah, Qantas is in an uptrend. This would be a hold if I had any in my portfolio. We never know how far an uptrend is going to go. It could be at the latter stages of an advance, or may only be halfway, or some other portion. It's let a trend go, and as I was saying earlier on, let it potentially surprise you on the upside, and that's by being optimistic that it can keep going. But also having that point where you say, okay, it's no longer working. That's a trailing stop. For me, that'd be well below the 100-day moving average at the moment, giving it plenty of room to move and plenty of room to try and stay on the trend. I don't think there's a rush to do a whole lot of buying maybe in the next week. Just watching how the ASX 200 goes. If it consolidates more over the next week or two or three or so. But yeah, certainly a trend for me that I'd want to stay on.
Okay. I'm assuming VGN is Virgin. Is that one taking off as well? It's a good dad joke there for Father's Day, by the way.
Yeah, that is excellent. I picked up on that, Rog. I was very impressed. Not enough price action to really give us too much. Like you can see, the 50-day moving average has only just started to be calculated, but it is on the on the good side of this very short 50-day moving average. Yeah, look, it's not a stock I'd be positioned in at this point. I'd need more. I need more data. Yeah, but it does have that broad upward momentum at the moment.
Okay, fantastic. Rob, let's have a look at IGL, please. Looking at an entry in IGL.
Yeah, it's getting quite volatile. I've got some of this myself. So the wide trailing stop saw off this sharp decline last month, then stayed in for the rebound, but now we're getting another sharpish pullback. I'm holding it. I'm happy to keep holding it. I'll have a trailing stop, which will be somewhere below the August low. In terms of buying it, I'd probably rather wait for it to see whether it can just settle down a bit, just stabilize. It can stabilize around the moving averages, and then ideally maybe break above this week's high. So if we got some price action that we just saw some sideways stability come in, and then from there we started to get a break higher, that's probably where I'd look to do some buying at the moment, rather than sort of like come in now and say, look, I can get it at a lower level, but then what if this price action is a precursor to sort of like another to like a bearish phase developing? I'd stay in the sideline for now and watch for that former price action that I discussed, or at least we come back and review it next week or the week after, see how it settles down. But yeah, I just don't like the look of that sharp decline over the last, pretty much today.
Okay, CCL.
Another stock in an uptrend. Hasn't been listed for too long, but a little bit more data than we had with Virgin, and the rising moving averages. I'd be happy staying on board. Again, I don't think there's a rush to do a lot of buying this week, particularly since it is a bit extended above the 50-day moving average. Maybe there's some more consolidation coming in the near term. But look, it's a trend I'd be happy to stay on. It's rising moving averages, above the moving averages. It's in an uptrend.
Fantastic. Shirley, let's have a look at KAR. KAR, sorry.
KAR, which is an oil orientated stock. It's oil's been a difficult commodity over the last few months, and is having it's not an uptrend, not in a downtrend. It's just whipping around, and that instability is having a negative impact on KAR. Had the makings of good price action, back above the moving averages. It was rallying, moving averages were rising, pull back to the averages. That was all okay. Just this most recent price action the last few weeks, it now has lost that momentum, and what was a relatively constructive consolidation has now turned into a deeper move lower. If I was holding this stock, like had I bought this initial move higher in June, it'd be getting close to my time stop. June, July, August, it'd be getting close to the point where I'd say, look, if I got in in early June, I'd probably be saying it's now below my entry point. It's been more than 3 months. I'd probably close it out and just say, look, it's not working at the moment. That said, not everyone wants to use what I use as a time stop. Others are happy just to give plenty of room to move, in which case I think there's still a case for giving it a little bit more. But it's at the point where I'd be wanting to know, okay, where do I actually rule off and get out of this? It's a motion trader stock, so motion trader's got a calculated trailing stop for it. which is a bit below current levels. I guess a vulnerability would be wouldn't want to see get stuck below the moving averages and get that sideways consolidation. I've lost my marker a bit, but sideways consolidation below declining moving averages. That becomes a point of vulnerability. It really needs to get back above the averages in the near term. So I wouldn't be a buyer, and if I was holding it, I'd be thinking about, okay, when do I say it's enough for now, and I need to move away, maybe look at it later on.
Okay. Hi, Russell. Let's have a look at DUG. We've already had a look at Qantas, Shirley, as you probably know. So let's go DUG. Thank you.
DEV, was it?
DUG, sorry.
Doug. It's really starting to get some nice momentum. It's had that nice consolidation along the moving averages, and we started to see that the breakout late August. It's a motion trader stock. Motion trader got it when it was breaking higher, so that was a nice entry point. I'd be letting it run. If I had some, I'd be letting it go. It is getting a bit above the moving averages. Maybe there's some consolidation not too far away, but that's okay. I'd be having a stop loss back below the 50-day, back below the 50-day moving average at this point, and then using that wide calculated stop, and see what the trend can do. Probably, I'm not in a hurry to buy some up here, but very happy to let some run if I happen to have some.
Okay, fantastic. The next one is BC8.
So it's a gold play, this one. And had the consolidation. So again, it's a motion trader stock. The wide trailing stop saw off this pullback and has stayed on board for the push towards new highs. I'd be happy staying on board. In terms of getting on board, if I wasn't already, a nice opportunity was as prices broke higher on at the start of September. Had that consolidation, and then we had a break. That was an entry point. Now I think it's probably a case of just looking for the next consolidation. Can we get some sideways price action while the moving averages catch up? But an entry point is probably a story for another day now. Now it's more a case of, for me, it'd be staying on board. And that's what I'm doing with my gold stocks. I don't have this particular one, but the ones I do have, it's the trend is up. I'll stay with that trend and give it plenty of room to move around, because that's where I think the money's made. The money's made by being able to stay on a big multi-year trend, and rather than just trying to catch little portions of trends on the way up. Try and catch the whole big sweeping trend, and give the trend room to have these pullbacks and stay on board. That's what I'm trying to do.
Okay, fantastic. Hi, Digby. Let's have a look at 4DX, please.
I think I spoke about this on my Friday strategy session. Huge rally in this stock. So it's that's right. I remember was asking me what would I do if I bought some at $1.39, which is what he did, and it was working out how do you manage your risk when you buy at an elevated point above moving averages, and it's hard because are you setting you're setting your stop just based on 20% is all I want to give it. Problem is when you give a stock like this, just say, look, I'm just going to give it 20%. This is the entry point I was talking about on Friday. I'm just going to give it 20%. Well, look where 20% is relative to the sort of volatility the share price is showing. That could just be a morning dip, stop someone out, and then rally back up. It's not enough, I don't think, to trade a stock with such volatility. That's why I prefer to get on board when the price action's a lot less active. Maybe buying an early breakout and having a stop at an acceptable point. For now, if I was on this one, I'd be staying on it. Maybe I don't know. I don't think I'd be taking any profits. It's not like if I was in at 50 cents and it's $1.80, I'm not like up 400% or anything. So I'd be inclined just to, let it run, see what happens. Wide trailing stop. My trailing stop is way back down here. So I'm risking that, much of that rally, but I think that's what's necessary to stay on these big trends. And it's like low price stock though. Maybe I would consider taking some off the table. Certainly not one I'd want to be buying up here, but one I'd be holding in some form.
Okay, next one, DYL.
So uranium, and it's this has been the best performing of the ASX listed uranium stocks. It's hitting, would that be all-time highs? It probably may well be, at least for the last several years. Look, I'd be letting this one run. In terms of buying it, I'd prefer to see whether there's a bit of a consolidation and look at getting in on the next consolidation, rather than buying it after a good rally off the 100-day moving average. Good rallies need to get consolidated. Like there's an example, there was a good rally and then there was a consolidation that just provided an entry opportunity. I'm probably looking for a bit of a consolidation for an entry now, but I'd certainly be holding it if I had some.
Okay, fantastic. Next one, we'll have a look at RZLV, please. RZLV must be a US stock.
Yeah, it's interesting price action. What I like is that like we've had this rally from like a long downtrending period. We've had this rally back into the moving averages, above the averages. The averages have crossed, got this long sideways period across the averages, and then there's another breakout. So that's sort of that classic structure that I really like to look for, and it often does lead to good rallies. Of course, not all the time. There's no setup that works all the time, but it's a good. Nonetheless, it's quite often a really good risk reward entry point. So even if it doesn't work out, you can manage the risk with a relatively close stop. So you buy the breakout and then have a stop loss just back inside the range. If I'd bought this breakout, I'd be holding it. So it would meet the motion trader criteria. So the averages crossed, made a new 70-day high. That would have been the entry point probably on the 29th of August. If I like this stock and I wanted to get some, like I could, it's getting to the point where it's probably still just within range of a buy at current levels. I'm just thinking like, where would I put the stop? Like it's almost like the stop is almost just getting a little bit too far. 25% is like where I usually say my maximum is. It kind of looks like it needs a smidgen more, like 28%. It's like it's marginal whether I'd want to buy at current levels. Maybe I'd prefer to wait for a consolidation. But the problem is, what if it just jumps up again, and then it can get hard? So maybe it'd be a case I could consider a half position at current levels if I was looking to get on board. If I'm already on board, that's great. I want to stay on board. Stop loss back down here below the moving averages, and then if we get a consolidation, we can look at maybe another entry point in the future. But yeah, certainly some potential with this structure. It'll be an interesting one to keep an eye on.
All right, fantastic. And as I get into the US market, I've learned that you can have one code tickers in the US. So F for Ford, please. F.
Yeah, that's right. Yeah, one, or you can have four. You can all sorts of combinations.
Assuming it's the top one, yeah.
Hasn't done much for a long time, Ford. Like, yeah, you can see, like even going back to 2014, long bearish phase, got a bit of excitement during the COVID mania, and then since then it's just been back to the business of decline. Is something changing now? Well, it's got a structure that could lead to more upside, rising moving averages, prices above the averages. It doesn't look like an especially doesn't look like a special setup or like that sideways price action into the moving averages we just looked at. It's I'm not overly enthusiastic about it, but you never know. Some of the biggest trends start from setups which I would have looked at and thought, look, I'm not overly excited about that. It's and it's the thing we don't know. We don't know which setups are going to deliver the biggest gains. It's about, can we manage the risk, and do we think there's enough upside to justify the putting on some risk? I think if one strategy would be to buy current levels, have a stop below that low from when's that, in July. Maybe it can be done with like a 12% stop. So I think that's pretty low or pretty minimal risk. And should the upside potential, or should an uptrend develop, well, maybe there's good upside there. So it's it's certainly a case for it. An alternate strategy would be to wait for these highs to break, maybe buying it around 12.20 or something like that, just buying a break above those highs. So just getting a little bit more upside confirmation, there's momentum there. And then the same sort of strategy, just stop back down here below the 100-day moving average. Never know. See how that develops.
Okay, fantastic. Glenn, great to see you jumped on DUG. We've already looked at that one, and you're getting good gains from that. Couldn't be a show without DRO. Let's have a look at DRO. Thanks, Shailendra.
Yeah, well, this is what happens when you get big uptrends. They get stretched from the moving averages. You get pullbacks. For me, it's probably not a buy at this point. It's if I was holding it, it depends where the entry is. Like if you're might be up 100% or so. If I had it, I'd just be holding it. Wide trailing stop, see what happens. See if it spends, like it could spend several months just going sideways. Maybe you can go higher again in the as we head into the end of the year, or maybe it's into next year. You just don't know. I don't think I'd want to be buying it at current point. It's not a pullback. I'm enthusiastic about buying because I think the potential is there for a longer consolidation. I think there's probably time to just sit and watch. But if I had it, if I'd bought down here at these lower levels that started to turn higher again, I'd be happy staying on board. I'd have a stop loss. Well, you'd be using the wide motion trader stop loss, but that would be below the 100-day moving average. That could, I'm not sure where it is offhand, but it'd be below. I'm quite sure it'd be below $2. It's giving it lots of room to move around. And I think that's essential for potentially staying on a larger trend should that develop. But look, as we saw back here in the July or the 2024 boom, the wide trailing stop got taken out, and gave back profit. That's what they're going to do. It's and people will say, oh, they'll get upset about that. Said, but I've given back so much. But it's the wide trailing stop that saw off all these other little pullbacks. Well, they're not little pullbacks. They're like 35% pullbacks. They look little on this scale, but they're big pullbacks. It's the wide trailing stop gets you to the point of having a big profit in the first place. And so I think that's the strategy that you then take forward. And at some point, you do give back some gains. But if you don't take the risk of having those wider stops in the first place, it's very hard to get the big gains at all. So I'd continue to let this one run.
Okay. DTR.
Uptrend. I'd be staying on board, let it run. Probably not buying it. It's well above the moving averages. It has been consolidating, but it could consolidate for longer. But and you can see the various buying points on this one. So, there's the initial rally. You got the pullback to the moving averages, traded along the averages, and you get a break higher. So that was an entry point. Here's another entry point, a rally. Then there's a consolidation back to the average. There's another entry point thereabouts. And now things are got stretched again. It's consolidating. So I'd be happy staying on board and see what happens with this one. Rising moving averages. All those markers of bullishness are in place. Let the trend run. See where it takes us.
All right. G'day, Sydney. Hope you're having a great time in Malaysia. Let's go over to Hong Kong stock 9660, please. Horizon.
Yeah, just starting to rally and break out recently. Fairly new listing. Yeah, look, if I was holding some of this, I'd be continue to hold on to it. I think there was a nice breakout here on the 28th of August. It's not too much higher from there. It's just about like, if it were to be bought at current levels, it's like probably needs at least 25% of stop loss. But my preference is buying when things are breaking out from these structures, these sideways structures or basing structures. Start to get a breakout. That's where I like to get on board. Not after they've sort of been going for a few weeks. But it's one I'd very much like to stay on if I was on it. Okay. And when we tie it in with what's happening in the Hong Kong market, I think there's certainly upside potential there.
Okay, fantastic. COG.
I've got some of this one, and I think I've got some of this. Maybe I don't. I've got one with a similar code, but nonetheless, uptrend. This one is up, rising moving averages, making new highs. Just seeing where it's come from. Yeah, like as we've been saying a bit, it's like let this trend run, and like we're seeing a lot of strength in the emerging companies segment generally. I'm not sure where this sits within the ASX generally, but I suspect it probably meets the criteria for the emerging companies index, and we're seeing like a lot of strength in that index. So those smaller stocks that come in, they rank somewhere between say 350 and 600, where they don't get much broker coverage. Not many people are talking about them. Not many people are looking at them. But if you've got a way to scan and identify them, as I do through Motion Trader, you can identify some really, really interesting opportunities that most people will just look at you with a blank look when you mention their name because people don't know about them. But yeah, there's I think there's stocks in this category are well worth some time into investigating. Trending this one is up. I'd be happy staying with it.
Okay, fantastic. Let's go over to the India index, the Nifty 50. Ganesh wants us to look at that. Obviously, you could be able to get an exposure to that on an ETF potentially.
So it's really been consolidating since the September high from 24. It's like you can see we're in a range. There's the September 24 high. There's the low from April this year, and it's kind of range bound. But the overall trend, well, we can see from there, the overall trend is up. It's just like how long could it go sideways? Like you can see this sideways period here lasted from October 21, really didn't break clear till July 23, so almost 2 years. It's not to say the same thing's going to develop now, but it's just to show consolidations can go on for a while. So we don't have that immediate upward momentum. If I had a sort of more of a longer term ETF holding in this, I'd absolutely be holding on.
Okay. Hubert, let's have a look at CRN.
Big downtrend, time to stay away, but now it's back above the moving averages. probably look, it's probably a little bit early for me. The moving averages haven't quite crossed yet, but it's certainly showing signs that maybe there's a turnaround in the makings. I'd probably like to see some more sideways price action. Let the 50-day moving average give it a bit more time to cross above the 100, and then from there, if we've got that platform, so if we get that sideways platform over a few more weeks or months, then there, if we start to see a break higher, that could be the entry point. So for me, I don't think it's quite ready yet. It's certainly one to keep an eye on because it's fallen from great heights. There could be a terrific recovery. Yeah, probably just a little bit more time.
Okay, FMG.
Yeah. I've got some of this myself. There's some resistance just above the share price at the moment. You can see that stretches back to 2022, but it's flipped to above the moving averages. The averages have crossed. I think there's a dividend payment in there, which brings the share price back a bit. But it's showing. It's the same with BHP and Rio. They're showing signs that maybe there's a turn in play. I'm happy to sit with this and see whether we can get some more momentum coming through. I think it could be considered at current levels. If I wasn't already in it, I'd probably say, look, maybe wait for a break above these highs from August, just getting into a bit more momentum, get a rally off the moving average and new highs, rather than just buying the pullback. But nonetheless, I think there's the potential of a turnaround happening in the big resource stocks.
Okay, fantastic. Let's have a look at Roberto's AS1.
Upward trend, acceleration in the trend. It's one for me, be one to hold on to. It's a 8-cent stock. Yeah, look, I'd probably find it. I'd probably struggle to chase it up at current levels. That said, if someone really liked it, it's. I think the risk is manageable. It's like requires probably like a 27% stop just to get back below the 50-day moving average, just back below these recent highs. So if this is to remain bullish, you'd want to see it hold on to those recent gains. See a shallow sideways consolidation. That would be the positive price action. If we see a quick reversal, it's trading back at 5.5 cents. It's not. There's no sign of that buying interest on the pullback, and that wouldn't be a strong sign. But at this point, if I was on board, as I say, I'd be happy staying on board and see where the trend goes.
Okay, NMG.
ANG.
NMG.
NMG. Very similar situation here. It's had this sideways consolidation, the recent sort of rally off the moving averages, and that's accelerated in the last few days. Yeah. Look, I think we spoke about this one recently, either here or my Friday session. What I liked about this was it's such a low price stock, but it's such a controlled rally in that it's been moving high, and then you get these controlled consolidations. So you get another strong up move, controlled consolidation where the gains are held. Now we've got that move upwards. I'd very much be happy hanging on to this one and seeing where it goes. In terms of buying it, well, it always gets harder with these ones once they pop. Really the story looking like probably needs almost 30%. It's getting a bit much, so it's probably wait for the next consolidation. But I think if on board already, great, hanging on.
Okay, Simon, we want to look at AAL, please.
Yeah. Look, lots of trends at the moment, and lots of rallies. Again, one to hold on to. There's upward momentum there. There's higher highs, higher lows, rising moving averages. The same challenge with like, do you buy it at current levels? I'm just, with the potential of consolidation, I'm not super excited about chasing stocks higher at the moment. That said, this one could be done maybe with like a 20% stop, but it's not my preferred way to get in. It's at the moment we're in that phase where there's stocks running, so it's like, when on board, I think it's staying on board, but also you always using those trailing stops. So you do have calculated exit point. You've thought about your exit plan for when things do ultimately turn lower. Like give that thought to exit when things are going well, so that when things do turn, and there could be a volatile turn at some point, there often is. It's then it's not a case of everything's too stressful to be able to think. So think through your exit now when things are good, and then apply that process when the time comes.
Okay, NST.
Yeah, it's seeing that momentum come back in. Evolution's doing the better of the two at the moment, so they're the two largest ASX stocks. Well, look, Newmont's also listed on the ASX, but like in terms of those like mostly Australian-based stocks, it's Evolution and Northern Star. Big pullback, and this was the case across a lot of the gold sector, that big pullback. But now we're starting to see that momentum the potential of the momentum coming back in. It's not really at new highs. It's still really between its previous high, its previous low. I don't have this one. I've got Evolution out of the two of them. If I was holding this, great. I'd certainly be staying on board with gold hitting new all-time highs. But it's if I was looking for a gold stock to get in, I'm not sure I'd be rushing to buy this one today. It just hasn't really been pushing hard in the last in the last bit, despite what gold's been doing. And it's just gone from below the moving averages to above. And when we see that, we often get pauses where prices go sideways while the moving averages cross and catch up. So a hold, but probably not a buy for me at the moment.
Okay, Evangeline, hello. Let's look at DRE.
Yeah, well, it's on the good side of the moving averages. It's had a big bearish phase for a couple of years, 2-3 years. Like, you just like I think most low price stocks are ultimately going to fail. I think that's just the way it goes with these super low price stocks. That said, some can turn into something. So nothing wrong with having a go at them, but I think it's also about just managing your risk around them and making sure that making sure you have exit strategies, and that when you buy them, you've got a reasonable exit plan. So I'd find this a tough stock to buy now, because I think to manage my risk, I've got to give it like 40 or so percent. It's too much risk for me to buy it. But had I bought some earlier on when prices were getting above the moving averages, by all means, I'd be holding on, see where it goes, and managing my risk, keeping my risk fairly tight from where my entry is, so I can pretty much get out almost at evens and see if it runs. So it becomes a really nice asymmetric play. But I don't. For me, it wouldn't be a buy. It'd be a hold of something that I got on at a lower level. Alternatively, it'd be like wait for the next consolidation and see whether we do get like I just noticed this big sideways structure, but whether we get like you get the run and then you get the consolidation back to the averages, then you get another breakout. That's the sort of price action I'd look for to consider getting in.
Okay, fantastic. Hassan, just want to say thank you for teaching how to navigate the markets. Jason, appreciates your honest opinion. And this channel is close to perfection in my view. So thank you very much. David, just in case, TMG, please.
Pullback time after a big rally, and yeah, this is the thing, we talk about it a bit. You get those big rallies that extend from the moving averages. You've got to anticipate the pullback, and don't be surprised when they come. And so the pullback and then the sideways consolidation that takes a few months. It's like, this stuff happens. It's like the lift off's exciting, but then you get the boring grind. At this point, we've got a bit of a false break higher. Prices consolidated. They look like they're breaking higher, but then they failed and they're coming back. So that's at the minimum, that's telling you the market's not ready to go higher. At the worst, it's telling you that sometimes trends end that way. It's a bit early to say the trend's ended, but it's certainly a warning sign. I don't want to buy a dip into a failed break, so I wouldn't be a buyer at this point. If I had some and I got in at lower levels, absolutely, I'd still be holding. Wide trailing stop, way comfortably below the 100-day moving average, and see whether it can stabilize. And it could just be a case that needs more time. Like here's another failed break. So we had the consolidation, attempt to break higher, and failed break. It was a warning that there was a longer consolidation coming. So it's not to say this will give it, do an overlay of what happened this previous time, but yeah, you can just see how it can be a warning, of that things aren't ready to go to the upside. So yeah, I think it's if I had it at a good level, I'm holding it. Wide trailing stop. Otherwise, I'm watching on the sidelines.
Okay, fantastic. Silver Sun. Sorry if we missed the
And
comment.
if I bought the break higher, I'd probably be looking at closing it out. So had I bought the breakout, very reasonable thing to do. I would have given it some room back to the 50-day moving average, 25%. I'd be saying, no, isn't doing what I thought it was going to do. Let's just take a 25% loss and walk away, rather than holding on, hoping it's going to go back up. Because what if it doesn't? What if it continues down? That's where people get stuck with stocks which are down 50 or 60%, because they buy the breaks and they don't want to take the early loss, and quite often they get stuck with a much larger loss. Not to say that will happen here, but you can just see there's different ways of managing it. Buying it early, great, give it lots of room to move because it's been working. Bought it late, it's not working for that entry point. Maybe time to walk away, come back another time.
Okay, CSX, please.
So we've got a breakout and we've got a trend. There's a big sideways period. Break higher happened in mid-July. It's been running. Consolidation so far looks, it's a shallow pullback to rising moving averages. Been a lengthy period of could that just be a large multi-year base? It could be. So this is it looks like it'd be a low volume stock, low liquidity stock, but this would be one I'd be happy to be on if I'd bought that early break higher in mid-July. I'd be happy to let it run. It's also at the point where if I liked it, I could consider buying into this shallow looking dip and saying, look, I could have maybe a 20 or a 25% stop on it, just getting back below the 100-day moving average, and see whether it can continue to find support before another push higher. So yeah, interesting stock.
Okay, the next one's from Lloyd, HZN.
It's a grinding rally. It's not a great rally because it just keeps it's really just keeps overlapping the moving averages. Doesn't looks like it trades that much either, because I'm just looking at the years down here: 21, 2, 3, 4, 5, So looks like there's a lot of days that go by without this stock trading. That's why why we can quickly just compress back to earlier times. There's an upward trend in place. It's not a strong uptrend. It's a grinding trend. That's not to say it can't keep going. Yeah. If I had it, particularly if I had it from lower levels, I could continue holding it. There's not giving me a reason to sell it as such. Looks like it's really been in a sideways phase since October 2024. So like almost a year of just sideways. If I was interested in buying it, maybe look at these highs from October 24 and April 25, a break above there. So it might be like 22.5 cents or something, buying into a bit of strength. But yeah, there you go. There's a trend in place, but it's very much a grinding trend. I prefer a trend with a bit more momentum to it.
Okay, fantastic. DB, let's have a look at BOQ, please.
Yeah, it's like when I was talking about the ASX 200 later, saying it looked like more as a big cap pullback. And so I guess it's stocks like BOQ, which is contributing to it. Whereas when you look at the equal weight, a lot of stocks aren't pulling back to this sort of extent. It's a concern to see it drop so quickly from above the averages to below. The averages are now crossing. I'd be considering where my exit point was. If I'd bought it at some point from, say, the end of April onwards, I'd probably be saying, look, this isn't working. I'm going to close it out. My time stop would be saying, okay, enough's enough. If I'd been in for longer, if I was in the money, I was in from a earlier level, I could stay with it. It'd probably still be above a stop loss. Just calculate the distance there. What's that? So look, it'd still be above my wide stop. So again, it depends where I got in. If I'm in from late April, I'm probably saying, okay, it's not working out. If I'm in from a lower level at an earlier time, it's still above my stop, so I'd let it go. So what I would do would depend on that. I certainly wouldn't be buying it. It needs to stabilize, get back above the moving averages before I can start looking at it. It's it hasn't been a robust performer over the last couple of years. Yeah, it's one I'd be happy just to leave alone.
Okay, fantastic. Last couple here, Jace. QBTS, please.
Must be this one. It looks a little bit like the another stock we looked at just a little while back. Be unrelated, but same sort of price action where there's been a strong rally and a consolidation and a false break higher, and then the false break higher was the indication that there's probably a longer consolidation coming, and that's been the case. If I was holding this from lower levels, I'd still be holding it. It's at this point, this is an ongoing sideways consolidation. Its moving averages are still generally, or the 100 days on the up, the 50 days just tilted down. But generally you'd say it's still rising moving average, and price is above the 100-day moving average still. So I'd be giving that the benefit of the doubt if I was holding it. If I wasn't already in it, I'd probably rather buy into some momentum rather than just say, look, I'm just going to buy it back here in the 100-day moving average. Look, someone could buy it at current levels and give it a 10% stop. Stop below the August low, but I'd prefer not to do that. I'd probably prefer to buy into the momentum. I'd prefer to pay a bit more and get in around close to $17. So you buy the momentum and see whether that continues, and buy the momentum then have your stop below the 100-day average. Yeah, but for now, the upward trend is in place within a consolidation.
Okay, fantastic. Last one here from Blue, GDG, please.
I've got some of this myself. It shows the trends getting a bit tired when you do get the big move higher. So it's probably on results came out. So and this was looking good. So you had the rally off the moving averages, the shallow sideways consolidation, then had a nice break higher, probably on some good volume as well. And then the next couple of days, it all got sold right back down. So it's telling you that this stock's probably getting a bit tired. I've got a position. I'm happy to hold it. I'm not looking to do anything, not looking to sell or anything like that. Wide trailing stop. I've had this for a while. It's been a terrific performer, and it could go like here's an example here where it was going sideways, strong move higher, quickly got sold. It just led into a longer consolidation, which the wide trailing stop saw off. I don't know what's going to happen here in terms of how long could the consolidation last if that's what's going to happen. But I've got that wide trailing stop to try and see it off. I wouldn't be a buyer at the moment just because it's come back so quickly. It's telling you the market's not ready to take this higher. But yeah, I'm happy to stay on board. That's what's worked for me. What's worked for me has been not getting bothered when there's these sharp down days which occur from time to time. Not being phased by those, not even looking at them most times because it's been so much above my trailing stop, and letting things stabilize, letting the trend continue on in its time. At some point the trend will end, but staying with it for as long as possible is how I keep saying how I'll make most of the money through my portfolio.
Yep, and that's exactly what we've been teaching after all these years, Jace. I think we'll wrap it up for today, if that's okay. Thanks for everyone and all the extra tickers that have come after I've mentioned the comment that unfortunately we probably won't get to all of them. As you know, we've all got the time that we've got to try and recoup and actually get to trading, right? So, or investing and doing whatever you want. But I do appreciate all your time, Jace. Thanks for everyone coming along once again. Don't forget, next month because of this 2-year show, I've decided that we're going to have a special offer for viewers, maybe new clients of Selfwealth or even non-clients of Selfwealth if they wanted to come across. If you do want to check out Jason, obviously Jason and all his amazing work, he actually has his own motion trader system there where you can download a copy of the exact system right for free, right? So it's over at motiontrader.com.au, but you can check out the link below and get a free trial there as well. And then you've got links to Selfwealth down the bottom. But do keep on coming, and in October we'll have something special for our viewers just to mark this 2-year anniversary of ours. Thanks, Jace.
Thanks, Rog. That was good. Enjoyed doing all that, and look forward. We'll go back next week and we'll have another go at it.
All right. Fantastic, everyone. Don't forget to like and subscribe and leave some comments down there as well. And we'll see you all next